Hi, this is Randy Finney with the right side of the chart, and today is Tuesday, January 15th, 2019. In this video, I wanted to go over a handful of stocks in the agricultural input sector. So those are your basic fertilizer stocks a lot of these stocks, some of these, I'll get to when I go down. I'll do this in descending order of market cap. A lot of these stocks historically pay good dividends, and there are some low price stocks and they're very aggressive. And what I'm going to do here, let's do this. I sorted my watch list. Here's the watch list. We don't have a lot of names, maybe a dozen or so to cover. And I've sorted them by market cap. And, I try to convey my thoughts as best as possible when I share a trade idea. If it's aggressive, I'll tell you it's aggressive. That means high risk, high reward. They go hand in hand. That is the one guarantee and absolute you will find in trading and investing. Risk and reward go hand in hand. You want a stock that might do double, even triple digit returns, as this stock has done in the past, then you're also looking at a lot of risk. So as I said in the video, I'm sorry, in the trade idea that I posted on the front page, this stock has been trending down for quite a while. It's an unmistakable downtrend, and it's still not yet a penny stock. But just keep that in mind with your position sizing. And again, I suggested made a downward adjustment to the position size on this trade, the suggested position size. And I also said, even if this trade does mesh with your trading style, which it might not, you may want to even further adjust that downward. So that's basically it. Now, what I see, let's just jump into these charts. Some I like more than others. On this one, it's pretty simple. You have the stock has been just doing a great job or the 50 EMA has been doing a great job. I'm circling all the reactions of containing this stock so far. So right now, and this is what I love to see on a trade setup, when I have not one but two well-defined resistance levels overhead. So essentially on this stock, I see a stock that is clearly in a downtrend. But this is, a reversal type pattern. You have bullish divergences forming on the RSI and the PPO. You have a pretty well-defined price channel here. And again, if it pops above 380, now the other day it went, I think, as high as about 382 or so. But I think if it gets there again, if it can pop above 380, especially ideally, like I said, guys, it's very hard to, trading isn't black and white. And as I mentioned before, trades that occur on above average volume or breakouts that occur on above average volume have a much higher success rate of playing out than those that don't. So I put up a front page post the other day that showed you how to calculate at any point during the day what a stock is tracking to on the average volume. You may want to revisit that or drop me a line in the trading room if you're not sure where to find that. So that's it. Let's not think too much about it or overthink it here. It's plain and simple. It is a trade setup, and like all trade setups, I made that very clear. It is not a trade. It's not does not trigger long entry unless we get a breakout. So again, ideally, what you want to see in a pulse of breakout. And on this little sucker, you'll know it when you see it. It usually, when it runs, I've traded this one for years. Get in, get out, hit and run. We caught it last year right here, and that thing even exceeded my uppermost target, and that was a 1600 or something percent gain there. All right, so that's it. Not much else to add to that one, but again, that is the lowest price in the group here. That's only a $17.5 million market cap stock. I get this question all the time on low price or low volume stocks. Yes, I don't use market orders. I'll use a market order to enter if the breakout's there, because what'll happen is you'll see that volume's very low and all of a sudden you get a breakout and you can see these volume bars back here during the breakout. When volume starts exploding on a low volume stock, it then has higher volume and the spreads will shrink. So what I like to do, if the volume is there and the breakout's intact, I'll enter on a market order if the spreads aren't too wide. Otherwise, I'll use a limit order. I'll split the difference between the bid and the ask. Maybe go on a breakout, go a little higher towards the ask price than the middle there, because the stock will usually be moving up at that point, and a lot of times they'll just leave your order behind. But then on the flip side, I'll always use, on just any trade, I'll use a limit order for my exit. If I take this one, it breaks out, and let's say I want my final target to be 618, I'll have a limit order there. If I decide to book partial or full profits at 534, I'll have a limit order there. Okay, so enough on this one, and just that's just general trading tips. Always look at the volume on a stock you're trading, the market capitalization, the price of the stock. Low price stocks typically have a higher risk than higher price stocks. Like here's one for example. I'm gonna have to flip to a different board here. This is a penny stock. This one is trading at 85 cents, down below that key $1 level, which is pretty important. Um, and back here it was priced down much lower than that, but it looked like it had a second breath of life into the stock, and it popped big. So again, it's risk reward. You're playing in the realm of these penny stocks. This one's still a larger market cap than Arcadia, not by a whole lot. This is an $18.3 million stock, but there's a 700% return in just a week or so there. So again, you have to decide if this fits your, risk tolerance, comfort level. And what you typically do with these is this is your Vegas money. If allot a certain percent of your portfolio to very aggressive speculative trades, because when you take a stock that is trading under $1 a share, a penny stock. Sometimes it can be above there, but anytime you're trading a penny stock, you run the risk of any given day waking up to seeing your stock trading down here, 20 cents, 25 cents because they filed for bankruptcy protection. They're not going to announce it ahead of time. The market usually does a good job of pricing that in, and that's what it's telling you with these low price stocks. However, this is a bullish chart pattern, and the reason I'm doing this video and I want to convey these thoughts, I'm not crazy about all the stocks in this sector right now. I usually use a top-down approach, meaning I'll identify, okay, what's the market, what's the trend in the market. Right now, since December 26th, the trend has been unmistakably bullish. So therefore, that's the beginning, the market. Then I go drill down to sectors. So I found a sector here with quite a few attractive setups, like I recently highlighted the timber and forestry, the home builders, the banks, all those things. Those were my sectors, and I believe they've all outperformed the broad market. So that's a top-down approach. Bullish on the market, then look for bullish sectors, and then within the bullish sectors that you find, look for the most bullish or attractive setups. That's what I refer to as a top-down approach, and how I find a lot of the trades I'm looking at. So here's one. There's been momentum in the sector lately. The broad market's been going up. This one just broke out recently, and you can see potential targets here. I'm not going to add this as an official trade. That's a penny stock. There's the levels if you want. They're unadjusted. These are actual resistance levels. So I always set my sell limit orders just below the level I'm targeting, and so there it is for you. And that one would measure, if you take a measurement of the wedge, the widest part of a wedge. This is a very simple and effective measurement. And now I just moved a trend line there. You take that and you add that to a point the wedge breaks out, and there's your measured target. So funny how, but not really funny, it's coincidental or not, that very often when I take a measured target, it lines right up with a price target that I have. So that would be the max target there, about 136. And this one's already broken out, so maybe you could take it now, set your proper stop, make sure you don't put too big a position in it, and you're talking 60%. So with a 60% upside potential, you can allow yourself for a 20% stop loss to stay in this trade in case it wants to come back here, maybe make a run at the back test the wedge or something like that. And that's still a 3-to-1 risk reward. And how do you get away with going with a 20% stop? You might say that's insane. Well, you take a reduced position size. You don't put the same amount you'd put into SPY. You put a small fraction of that, maybe a third or a quarter of the position size, and therefore a 20% loss on a 1/4 position size for you should be about a 5% loss on a normal trade. All right, next up, CGA, China Green. What I box this here. Sometimes when I see this is a capitulation type selling right there, and you have a little spike below and then trading normalized. So I excluded that part of the candle, and that gives us a nice falling wedge here. Also a penny stock. Remember, I'm going through these in reverse order of starting with the smallest market caps. As we get to the end, you'll see some larger, more liquid stocks, less risk in those. But there it is, bullish falling wedge on CGA, China Green. And I probably should add some additional targets. Let's see, yeah, down here. This would be my first stop, about 68. And then let's just bring this one down to that reaction high, about 75 or so. Things really got good for this one. I don't see that anytime soon, but I'll tell you it's possible with these low price suckers, all the way up to about $1.20 there. MBI, no, I'm sorry, MBII. Marone Bio Innovations. This one's a breakout of this downtrend line and a back test. That's all it is. So it's somewhat objective here, but I'll just tell you, not my favorite. There's pretty decent support here around 120. Again, we're flirting with a pretty low price stock. So, but there it is, back testing. And I just wanted to kind of give you guys a broad overview of the sector. Some of you, these are, again, these are ag input stocks, fertilizer stocks, a lot of these. And they're pretty well traded, although they're thin. But I've seen a lot of traders focus on these stocks over the years, especially when you get into the bigger names, which we will in a minute, because they usually pay pretty attractive dividends. Maybe not right now at this point in time. AGFS, AgroFresh, just a nice little divergent low right there. It's traded through the 50 recently, but the 50 does a pretty good job of acting as support and resistance. So this one might be able to run up to the 50, and from where it's at now, you might get 10, 11%. And actually, that'd be my target right here. Let me add that. There are some reactions right there. It's about 427, 430 maybe. I could see this one lifting up to. Again, I don't see a strong buy signal. It's more of a momentum play right now in the market. I'm viewing the market somewhat as a game of musical chairs at this point. And the reason I started with RKDA today, is because we've already seen, as I get to the bigger names, a lot of these bigger names have already popped. They've already run. And what I'm seeing lately, I'm seeing the pot stocks going up. I've seen Bitcoin moving lately on some days. So I'm seeing that dash for trash again, where everybody thinks they dodged a bullet. Maybe they did, but they're treating this as a typical, usually those lower quality, lower tier stocks tend to run towards the end of a bull market when there's no fear in the market. And right now everything's been going up. The market's been strong, so I'm seeing everything being bid up, and a lot of crap stocks, if you will, as well. So these lower price stocks, I think this is late stage. Usually the leaders will take off first, and then you'll see people coming in and buying the lower quality second and third tier names. So there's one for you. Now we're getting a little bit larger up here. This is a $414 million company, IPI Intrepid Potash. Let's see, I might have levels here. Yeah, there's a level. This one's at resistance. So see, here's one I wouldn't take right now. It's already rallied up to resistance. And again, there's been a lot of momentum in the sector from these larger names. This one's up 30% or so in just a few weeks here off the lows, but it's now rallied into resistance. It's also run into the 50. The PPO is in a bearish posture, so I would not be interested in this one. And there's that other board I showed you before. You had a breakout of the downtrend line as well, which helped, confirm a long entry right after this one bottomed. UAN. Let's see. I have a couple boards. I might have drawings on these. I don't see a whole lot here that stands out to me, so let's move on. AVD, see there's a beautiful divergent low, bullish divergence, strong divergence on both the RSI and PPO, but the train has pretty much left the station. Again, I just want to highlight this, that a lot of these larger names are moving, so there's momentum in the sector right now, and therefore I think those second and tertiary lower quality stocks like RKDA could pop here as long as the music continues to play. It's like a game of musical chairs. Once the music stops, time to get out. But as of now, the music's playing, and we don't have any, other than, like I said, if those 60-minute trend lines go on the futures, the index futures, maybe we get a little pullback. But that's, at this point in time, that's really all I'm looking for. Another 2% or so, 1-2% below where we went to yesterday. So there's a potential bull flag as well, and this one could continue on up here to 1814. It's at mild resistance, but I wouldn't short this one, not after such a strong divergent low. PPO is popping above the zero line. That's a trend indicator. It's already had a heck of a correction off the top, so I imagine there's a valuation case to be made for this stock that's fallen 40% or so in just a few months. So there's one. Again, hard to chase it here. Maybe on a pop above that bull flag up to here, trade it, swing it up to about 1814 or so, that previous reaction high. SMG, Scott's Miracle-Gro. I'm sure a lot of you are familiar with that company. There it is, divergence on the RSI, not necessarily on the PPO. Trend indicator is still below here. The PPO is still below there. And SMG has run into the 50, although it's actually sliced through it quite a bit. See, sometimes a key moving average can do a great job of acting as support or resistance, and then sometimes you can have especially when things are volatile like this. You've chopped through a lot of whipsaw signals where it traded above it and then fell back below. Maybe sooner or later it takes it out. And what I do like right now, if it does pop that 50 and can continue to run here, I think it can make its way up to 72.93 as my first resistance slash target. But then you have, if it can do it quick, you'd come in and hit this downtrend line, and the 200-day EMA is coming in exactly where that downtrend line is. So that'd be almost like a magnet, if you will, a natural target. And at that point, if you do go long this one, or if you already are, it's probably a great place to take some profits, maybe recycle in on a pullback, or just get out. SMG. ICL, Israel Chemicals, is an uptrend line. Had one little false breakdown there, a little, and that can be pretty bullish when you have a failed breakdown. You broke below there, had a close below there, and then snapped right back up. It also took out this downtrend line. I mean, there's a lot I see in this chart. You know, it all started here. We were in an uptrend. You had negative divergence. The negative divergence certainly played out for correction. Like I said, took us down there in the panic selling in the market. And then right after that, it recovered, which two things bullish happened. It regained the trend line after just one day below it. So there's a failed breakdown, aka a bear trap. And it also took out the uptrend line, or I'm sorry, the downtrend line. So there's one. It's in an uptrend as long as it remains above this uptrend line. That's the primary trend right there. Not crazy about this PPO being deep down below the zero line and starting to roll over at that zero line. So let's just pass on that one for now. But again, if you like it, there it is. And there's your stop, probably below that trend line and the 200-day moving average down below. CF Industries broke up trend line support, came back down, hit this support here at the $40 level, bounced, came up to this 46.23 resistance. I have both the 50 and 200 just crossing over recently, and this one failing after trying to take those back. So I don't like this one right now. I have to tell you that. Again, I wouldn't short only because of market. That's why you're not seeing active short trades on the site right now. The momentum's too strong. And I still think we can see some more upside here in the coming weeks here. Otherwise, I wouldn't be focusing on so many longs. If that changes, I'll change. But so again, could you short it and get another pullback to the $40 level, maybe even more? Absolutely, you may. But it will just be a lot easier with a wind to your back. In other words, with the market moving down as well, and the majority of the stocks in this sector moving down. So that's why, if I had to guess, I mean, just look at this chart, I'm more bearish than bullish. But again, I just don't see, I don't have a desire to put a lot of shorts on at this point in time. FMC, there it is, nice, clean, big divergent low. Again, this chart speaks volumes to me. The stock, you know, you look for these divergent lows and divergent highs. Simple wash, rinse, repeat stuff. Divergent low, we had a rally. That set up there, and we had two equal highs with the indicators making lower highs. There's negative divergence, boom, correction. And now we've come full circle, and we have another divergent low. Yeah, in hindsight, I wish I would have looked at these stocks a few weeks back. But again, the point is that there's upside momentum, and as I'm getting into these larger names right now, in this one, like a lot of others, appears to be flagging. So there could be another thrust up here to about that 86.56 level. So that's why I wanted to point that one out. MOS, the Mosaic Company. There it is. This is what we're looking at here. You had an uptrend line, a little whipsaw signal. This one is whippy. It's prone to whipsaws. We had 1, 2 false breakdowns there, but it stayed above trend and finally gave up the ghost right here. Had a nice correction. The 50 has done a good job of acting as support all the way up in bull trends, also resistance and downtrends. And so right now I'm looking at one of the market leaders here in this industry coming up, testing, and actually for a lot like the broad market recently, broad market's also hitting its 50s, testing that level and failing to get above there recently. And this is going to resolve one of two ways: either a bullish breakout, resistance is resistance until unless broken, and the longer you test it, that's coiled energy. If you can break out, maybe that's bullish, and then maybe it'll take us up here for a back test to that uptrend line. However, if you can't take out the 50 and you fail, well, that's obviously bearish, and you can see the next support down here. So there's Mosaic. Not one I'd be jumping on right now, but I just wanted to kind of do a complete picture of the sector. Wrap up here with NTR, Nutrien Limited. This one has already rallied up to resistance and the 50. So again, a lot of the larger caps have come to a level where they've moved off the bottom, and I think I don't want to say my most bullish scenario, but the bullish scenario would have them consolidate maybe a little bit more, maybe even break out, move up. And if they can hold up, in other words, if they can take out these 50s and these support levels here, I think it'll help. You'll see those lower tier stocks like RKDA and some of the other ones I mentioned maybe start to play a game of catch up once they see the leaders, are continuing to rally. So that's why I'm focused right now on those low price ones, mainly because the risk reward is more attractive, if that makes sense. So although they're more aggressive trades, again, we account for that by adjusting our position size down to a point where if the stock gaps down 20% one day, you're not going to be wiped out because you didn't have a full position or a big chunk of your portfolio in there. And the way I like to trade when I'm doing trading a sector and trading low price stocks like these that I went over, is a shotgun approach. You can take your favorites out of the sector like this one and RKDA, and sprinkle a little cash into each one because you never know which one's going to take off big of these low price names. So that's another way to sort of diversify and pick 3, 4, or 5, whatever many you can manage and afford to put into your portfolio. All right, we'll wrap it up here. This has been Randy Finney with the right side of the chart. Hope you enjoyed it.